Hello, trading has closed on the 22nd of January 2025. As always, we'll do our disclaimer, go over our calls, and then make our predictions. It's my trading plan for Thursday, which is January 23rd, 2025. Remember, my plan can change, my plan can be wrong. Trade at your own risk. I use the MEJT system and other systems. It gives targets. It says nothing about entries. Look today for the pattern with the early high, which is this. Tomorrow should also have the early high. We said the rally was targeting a new all-time high, hitting a straight line move. We got that today by a fraction of a point, and that's enough. We said if it plays out, we have to consider the possibility we're in a third wave higher. That's possible. I'm going to present another alternative today. We're going to change our order, our usual order, and go over today's action first, and then take a look at the longer term count. MEJT gave a number of moves that said were false, they wouldn't stick, and they didn't. They've already retraced, and that's played out. We got rid of a lot of, in fact, all of our outstanding higher objectives. One objective was that we get this last higher target from last year out of the way. 60.59.18, went through it, that satisfied the target. We ended the year with 6 unfilled targets. We're now down to 4. That's out of about 650 targets a year. If you look at the track record, 4 in a year isn't anything really out of the ordinary. So if those never print, it doesn't disturb me. So one target was to get rid of this. Another target, we said last week, about 300 points lower, that the false break of the head and shoulders consolidation had a target of overtaking this high in a straight line. And we did that today. Now, just because you hit a target, that isn't a stop and reverse, it's a target. But nothing in this pattern requires us to go higher. I did have trouble counting this wave up, and I still do, to be honest. We had this as wave 1 and wave 2, and I had wave 3 in the here with a Fibonacci relationship to wave 1. This you could count as an ABC, but we said it could be still part of the third wave, but you then have the unusual situation where wave 1 of Magenta 3 and waves 1 through 5 of Magenta 3 each would have to have some kind of Fibonacci relationship to wave 1. It certainly doesn't break any rules, but it would be quite a coincidence. It's entirely possible that's the end of Magenta 3, that this ABC was Magenta 4, and maybe this impulse is the end of 5. I mean, maybe that's the end of wave 1 here. Maybe that's it. It certainly is possible. It doesn't break any rules. I can't find any Fibonacci relationship between this and this other wave, but you don't have to. I certainly got tricked here by the lack of a Fibonacci relationship. I missed the low by about 15 points or so, but still a miss. But maybe this is a 5th wave. Maybe that's the explanation. Right now we gapped up, hit higher highs, closed under all these highs. If that's maintained at the open, it's a negative pattern. Now, it doesn't have to be maintained. We can gap up here and then just get your eraser out and forget what I said. But if we don't take this high out early, ideally with a gap, either direction, you should see lower prices. It doesn't mean you're going to close lower just because you satisfy all your targets. That's a target. It's not a stop and reverse, but I still want to see these wall with gap patterns fill. At some point, I have things requiring us to go lower and nothing requiring us to go higher. And we have this pattern, if maintained, says we're going to see lower prices tomorrow. Well, Thursday's pattern has the early high regardless of where we open. Normally it is a bearish day with a low in the final hour, but if it's strong instead, we should see more strength. Now we gapped up, hit a higher high, but closed under intraday highs, and if maintained at the open, it should lead to lower prices printing tomorrow, regardless of where we close. Now today's new high satisfied the target of the failed break under the head and shoulders consolidation, the last higher MEJT target printed. Now the absence of higher targets isn't a sell signal. I just don't have anything requiring us to go higher right now. Gapping over today's highs, and ideally the Gann fan line, if maintained, still can take us higher. But we have large divergences in breadth and in other indices. Here are some. Divergence in MEJT, divergence in RSI. NASDAQ McClellan's over its upper Bollinger Band. If you reverse through it, which hasn't happened yet, I don't have today's figures, but if you reverse through it, it gives a sell signal. Bulls need to gap and overtake the high day to continue the rally. We've already gapped up 6 straight days, which is far more than we normally see. This is one of the places in which the advance could end for now. Now, the last time we hit a new all-time high was Friday, December 6th of last year. There are certain periods in the calendar where you're just not going to hit highs that stick. And Friday, December 6th was one of those days, and today isn't. So that's one more requirement to trade higher, which was satisfied at today's high. We've gone up 6, we gapped up 6 days in a row, have all kinds of divergences. You gap up 6 days in a row, have a rejection of the move to a new all-time high. Either you reverse this fast at either by gapping up, or you're asking for trouble. And if you ask for it, you don't always get it, but you just might. So it's the pattern with the early high. Bulls need to keep going. They need to gap up. Like ideally, they can gap either direction and take this out, but tomorrow has the early high, so you really want to gap up and take this out. And if they don't, I think we're going to see lower prices tomorrow. I still want to see these wall with gaps fill at some point. And I don't have anything requiring us to go higher. I just have something requiring us to go lower at some time. So we'll have to see where we open, and that's today's call.